how to get your loan approved by the bank every single time. Now, if you remember from last week's video, we actually covered the first 3 steps in this 5-step process. So in this video, I'm going to cover the last 2 steps. If you haven't watched the first video already, go back and watch that after you're done watching this video. I'm going to put a link right here, and I'm also going to put a link down in the description below. But in this training video, we're going to be covering my final 2 steps that you're going to need to take if you want to get your loan approved every single time. All right, in the last training video, we actually covered the first 3 steps in this 5-step process. All right, the first step to being able to get approved by the bank every single time is number 1, pulling your credit and then working on it. Now in this step, we talked about the free ways to pull your credit report and some of my best tips to making improvements to your credit score. Now the second step was to build a relationship with the banks. In this step, you're going to want to make the banks your friends. Having solid relationships can help you speed up the entire process. And step number 3 is to understand and work on your debt-to-income ratio. Now, this is the ratio that the banks use to determine your capacity to pay your loan, and you need to know how to determine your DTI ratio and how to improve it. And everybody, just do me a quick favor real fast. Hit that bell, turn on post notifications. I'm really working hard to bring you as much value as I possibly can, and this is how you get notified whenever I drop new training. So thank you for doing that. I really appreciate you. All right, in today's video, I want to cover the final 2 steps, which are step number 4 is to understand mortgages and what terms work best for you. And step number 5 is to be prepared to have skin in the game. What I want to do right now is talk about mortgages. Now, there are dozens of different types of mortgages that are out there, and it's really important that you understand what the more popular ones are. There are actually 3 popular mortgage categories. Number 1 is called fixed rate mortgages. Now, these are exactly how they sound. They are fixed interest rate mortgages over a certain period of time, like 30 years or 20 years or 15 years. They are fixed because the interest rate doesn't change over the life of the loan, and they provide very predictable monthly payments. Second type are called adjustable rate mortgages, and as you might assume, these are mortgages with interest rates that change. Now, these are more riskier mortgages because interest rates can change, and sometimes they can go up, which is going to increase your monthly payment. And the third type are government-backed mortgages. These mortgages were created by the federal government in order to stimulate home ownership for first-time home buyers and low-income home buyers. And you've heard me talk about these before because the most popular type of government-backed mortgages are FHA loans. Now, these loans allow buyers with low credit scores and lower initial capital, less money, to be able to purchase houses that otherwise they probably couldn't afford or qualify for. Now, the best situation would be to obtain a fixed rate mortgage, but sometimes that's not always affordable. Usually fixed rate mortgages, they come with larger down payments of at least 10%. So if you're purchasing a home that, let's just say, was selling for $300,000, that means that you're going to have to come to the table with $30,000 in cash. Now, don't be discouraged if you don't have $30,000 in cash just laying around, and don't lose hope, because you're still going to be able to qualify for a government-backed mortgage. So your best bet in this situation would be to obtain an FHA loan where you only need to put 3.5% down to purchase the home. Now, on a home selling for $300,000, that's only $10,500 as your down payment, which is way more affordable. Now, this is going to give you more flexibility to be able to put more money into the home for things like furniture and renovations. Listen, the point I'm trying to make here is you got to do your homework. You're not going to be able to just go walk in, get your loan approved through a bank if you don't know what situation works best for you. You have to be in tune with the current financial situation that works best for you, and the best way to do that, in my opinion, is to just go online and use a mortgage calculator. Simply just Google different mortgage calculators, play around with the numbers, see which mortgages are more affordable for you, and in my opinion, you have to know this information before you go and walk into a bank. Otherwise, you kind of walk in blind and you don't know whether or not you're walking into a good deal or not. So here's what I'm going to do for you. Down below this video, I'm going to leave a link to a couple of my favorite mortgage calculators just so you can have a point of reference. All right, what I want to do now, I want to shift gears and I want to talk about the final step in getting your loan approved from the bank. All lending. For any bank, it comes down to one simple word: risk. All right, risk. The least risky you are to the bank, the more likely they are to do business with you. And in my experience, it's always a great idea to be prepared to have skin in the game. And what I mean by this is simple. Either you have cash to put down or you have collateral. And collateral can come in different forms, such as real property. It can be land or buildings or other homes that you own. Come in the form of cash or cash equivalents, things like savings accounts, retirement accounts, investment accounts. Or it can come in the form of valuables like art or antiques or gold or jewelry. Listen, having skin in the game is the number one way to decrease the bank's risk and get them to want to do the deal. Banks absolutely love it when individuals bring cash or cash equivalents to the table. This is the fastest way for them to get approval through their underwriting so that way you can get your loan. All right, you have to be careful with this a little bit though, because when you put these items into the deal, it's important to note that if you default on the loan, all right, you're risking losing the asset or having the bank take control of whatever asset that has been used for collateral. So essentially, your cash or assets that you put on the line to secure the debt is what the banks are going to use to recoup the money that they've lost if you don't end up paying. So long story short, be careful and never do a deal that you can't afford. All right, let's do something real fast. Let's recap what we talked about over the last two videos. We covered the 5 steps for getting your loan approved. Step number 1 was pulling your credit and working on it. Remember this, it takes a minimum of a 580 FICO score to qualify for government-backed programs, so know your score. Step number 2 is to build relationships with the banks. Banks are only going to do business with people that they know and that they trust. So sell yourself and build that relationship. Step number 3 is to understand your debt to income ratio. This is the number 1 metric banks use to be able to determine your ability to pay, know, and consistently approve upon your DTI ratio. Step number 4 is to understand mortgages and which types work best for you. Use the online tools to calculate what's affordable for your situation. And step number 5 is to be prepared to have skin in the game. Come to the negotiation table with cash or assets because it's definitely going to speed up the approval process. All right, that's all I have for you guys in today's training video. Take these 5 steps and apply them to your current situation. Listen, in my experience, banks don't want to lend anybody any money that actually needs money. They want to lend money to people that really don't need money. That's why setting yourself up for success before you're actually in a situation where you have a smoking hot deal and you really want to take advantage of it because you know it's going to help you build wealth, but by then you're already behind the curve. You got to set yourself up ahead of time. That's why I put out this training video. All right? Let me know your thoughts on this one. Here's what I want to do. Drop a comment down below on what you think of this training video series, your number 1 takeaway, and I'm going to pick somebody at random and I'm going to hit you up through a DM, and I'm going to send you out a bunch of clever swag. A lot of people are like, dude, I love your hat. I love your shirts. I want some of that cool, clever swag that you're always wearing. Well, here's what I'm going to do. I'm going to pick one person that actually steps up and comment at random, and I'm going to send you out a whole bunch of clever swag just for participating and not being one of those boring adults that just, sits and watches. You're actually participating, and I like that about you. All right. That's all I have for you in this one. Thank you for turning on post notifications, smashing that like button, and if you want to go deeper on some of this stuff, make sure you click the pinned comment link down below and take me up on my 30 days to a deal challenge. This is where I show you how I got started in real estate doing quick flipping. All right, this is how I made my first $1 million in the business. So if you're looking for ways to create income as a side hustle or even as a full-time gig, this is where I would start. So click that link and check it out. Till next time, I'm Cody Sperber, the Clever Investor, signing off for now. Take care, comb your hair, Sperber out.